You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Matt Mosman, I'm thrilled you could join me in the Blockchain CEO series. We're definitely taking a different tack today. Usually we're investing or talking to CEOs. Well, you're a CEO of a venture capital firm investing in CEOs.
Correct. Well, CEO, I'm not a CEO. I'm the managing director for the Medici Fund, so at Pelion Venture Partners.
Thank you very much for correcting me. And everybody's kind of a CEO the way I figure it.
Kinda, yeah.
But it is a title that needs to be respected. So I'm happy that you corrected me. And then, along those same lines, tell us a little bit about Pelion and how Overstock found you.
Well, sure. I think the way they found us is we've been around quite a while. So Pelion's been around since the 90s, and we're currently investing. In addition to the Medici Fund, we're investing out of our 7th fund, and primarily over the course of a long stretch of time, we've invested in software. We were seed investors in things like Cloudflare, which is a $30 billion company now, Divvy, which was bought last year by Bill.com for like $2 billion. We invested in Weave, which went public last year and is super undervalued. And then back in the day, we invested in things like, Riverbed and Red Hat. So we're not new at all. And then I would say about Pelion, in addition to the Medici portfolio, we're also just investing in blockchain companies along with other types of software, just from our main fund. So we recently invested, for example, in this really cool DeFi company called Giddy, and we're looking at blockchain deals all the time. Probably the way that Overstock ran across us, though, of course, is that we are literally located in the same town they're in. And so we're in Salt Lake City. We do a lot of work here in Utah, which is a really underrated tech hub, actually. But we also invest all across the country. We do a lot of work in the Bay Area and in LA, and we have deals in Austin, Atlanta, and in the Northeast. And then the Medici portfolio itself is worldwide. We have portfolio companies on 4 continents. We don't have any investments right now in Antarctica, but I'd be happy to take a look if someone's got one. And then, just as blockchain investors, we're toward the top end in terms of the number of investments in blockchain of any fund in the world. We have people in the firm like me who really focus on the space, and we're big believers. Overall we have 22 or 23 blockchain investments. 2 of those have exited. Neither of those was like earth-shattering yet, but there were nice results in both cases. So yeah, we're really excited about it.
Yeah, when I started my career, I had some good exposure to the venture capital market. Mm-hmm. Unfortunately, we passed on this little company called Dell Computer, and and the interesting part about that story is that here was a business plan, about changing the way something was sold more than technology change, right? Yeah. It goes back a little bit to your picks and axes story that you mentioned in the Medici Mayday webinar, which I really encourage everybody to listen to, just to fully understand in a 3-hour period the portfolio. But today you don't hear anything about Compact Computer, right?
No, oddly, what's funny is my very first job out of MBA school was at Compact Computer. So
oh, that's funny.
worked there all those years ago and watched Dell do what they did.
Yeah, you've got a lot of technology background. Give us a
Yeah.
little of that, please. Don't be too modest here.
Yeah, so I spent most of my career as a tech M&A guy. So I ran the M&A function for Oracle, for example, for a number of years. And Oracle, and kind of my first intro to venture capital is Oracle had a $500 million venture fund that reported to me. And super fun. We did really well. And that's how I got into it. And also how I met the founding partner, or one of the founding partners at Pelion, is he and I was an investor through Oracle in a Kleiner Perkins fund, and he was an investor through Novell, where he was running their venture fund in the Kleiner Perkins fund. And we met at a Kleiner Perkins LP event. So I've known him for 25 years.
Yeah, I was just about to say we're dating ourselves, right, in this
I know,
conversation.
man. I think I date myself already with the gray in my beard, so I have nothing to hide.
Me too. Yeah, I'm back at you with that. So, dating ourselves a little further, let's talk a little bit about what exactly you mean when you talk about picks and axes. I mean, I understand that you promote the analogy of the gold mining era, and I agree with that. But what does it mean to be picks and axes in the context of the blockchain or Web 3.0?
Yeah, I mean, I think there's a perfect example for us is Cloudflare, right? Where that's a huge company that nobody hears about because it's kind of back behind the scenes. And there's a tremendous amount of money always in every new market to be made in the plumbing of the new thing that's happening. And so it's not that we would ignore something that's more at the forefront, but there's a lot of juice in that back office.
Yeah, it's so easy, and we're not here to talk about Bitcoin. It's not particularly relevant. But it's so easy to measure success when price goes up and down. But with venture capital, it doesn't move like that, not on a daily basis, right? Which makes it a little bit tougher. You require a little more patience, and definitely a lot more strategy.
Yeah, I mean, most venture capital funds are on a 10-year time horizon, right? And so honestly, a company can just suck for 5 years, as long as it takes off in that time horizon, you're great. So we don't pay very much, I mean, except that as it's a leading indicator, you don't pay that much attention to any given quarter or week or month. You're just sort of like, let's build this thing and build it to be massive and huge and change the world. That's what we care about.
Yeah, and change the world. I had some exposure to the biotech side when I was just getting started, and in your case, you were early in the blockchain Web 3.0, and I believe that on the Medici Venture Day, it was highlighted that only 1% of venture capital is going into blockchain Web 3.0.
That's right.
Which means you're in a unique position with a unique network and doing really unique things. Can you talk to us a little bit about the environment today after we went through really a tough period of time? And are we looking at down rounds? Are we looking at people continuing with the investments?
Yeah, well, I mean, first, just with respect to the blockchain investing, as I mentioned, you mentioned 1% has gone that direction. I'm going to bet that that's going to pick up over time. As I just noted, I've been around a long time, and it feels to me a little bit like the early days of SaaS. So I can remember when Mark Benioff, with whom I used to work at Oracle, he had to have his people run around other people's venues with these signs that said software with a circle and a slash through it to evangelize the concept of software as a service. And now, you can hardly think now of a world without SaaS, but it's really useful to remember that it wasn't always like that. There were people who didn't even think it was going to work, if that can be imagined.
Yeah.
And blockchain feels like that to me. So I think it's going to pick up over time. In terms of the current environment, it's a little bifurcated between new investments versus follow-on rounds. So with new investments, it's actually a really great time for investors. As investors, you definitely don't want to do investing backward, and deploy all your capital in frothy markets. So valuations are down, and that's not altogether great for founders at one level, but it does mean for them that smart investors will be deploying capital, right? So it's a little bit of a mixed bag for new investments, because the bad news is that your valuation is going to be lower, but the good news is that you should be able to attract funding, right? On the other hand, follow-on funding for existing investments is just a nuclear winter right now. We're advising our companies across the portfolio, not just the energy portfolio, but our whole portfolio, to conserve their cash, live to fight another day kind of thing. It's hard to get new investors without showing some significant product market fit through, usually customer traction. And just nobody's going to invest in a B round that's still mostly just a story, right? The minor caveat would be it's possible to raise money in a follow-on financing if the company's willing to take a down round or a flat round, but if the company's out there and they're expecting to get a 2020 type valuation in 2022, that's just not going to happen. So valuation wise, things are way down for any company at any stage, but I think it's just to a more sustainable level. You're not going to see firms putting in a 35 million pre-money valuation to 3 people in a PowerPoint, which was always going to be a little nuts. So I think it really does help to have seen a few of these cycles before, and this is just one of those.
Yeah, but the capital is available. I mean, we're seeing capital being raised in technology. We've seen a lot of funds come out with success in that.
Well, because it's a good time to deploy capital.
Sure.
But you're going to deploy it and you're going to take your pound of flesh because the market demands it right now. So you're not really, nobody's going to get this super premium valuation that they were getting, 18 months ago or 2 years ago.
Yeah, well, I mean, you're correct, of course. It's always a question on how things are valued that I always struggle with, because there's different stages here. Walk us through a little bit the different stages. There's an A, there's a B. Some of the people listening to this aren't going to necessarily understand what that all means.
We invest primarily at seed and A. So seed round deal would be, maybe they don't even have a product yet, right? So I invested in a company last year where it really, like I just described, 3 people in a PowerPoint. It really was that. It was 3 people in a PowerPoint. It happened that the person was a guy I used to work with at Oracle who I know to be brilliant and I know to be just a killer in this particular space. So I wanted to be in his company, right? But that's all it was at the seed level, and it often is. An A-level deal would be you have very little customer traction. You just finished your product and people are starting to pick up on it. That's kind of an A round deal. And then by the B round, and then go on further, C, D, E, all the later rounds, you're just, the only metric after that is traction, right? What I always say is, I'm not particularly smart, but my partners are, and so, you know, they may be smart, but they're not smarter than a market is. Markets are brilliant. They tell you what's going to win, and people vote with their wallets. And so at the kind of B, C, D, E rounds, it's like, just show me the numbers, and that's it. You know, early on, it's who is this person? How resilient are they? Do they have a great idea? Do they have some experience in the space that's going to make me feel like they can solve a problem? All those kinds of things are in the early rounds. Does that make sense?
Yeah, I know. It totally makes sense, and I totally follow you. And when I was just getting going in '87, the crash occurred, and I'll never forget. My boss said, "Bring all the files in." We had about 100 different investments, and almost all of them were seed. Okay,
Yeah,
and
yeah.
we wrote down, I'm going to say 85 of those companies to zero. And you know, listen, some of them survived, and we were real happy. Obviously, that's not what we're talking about here. You know, and I think what's almost more important is, I think the venture capital market has evolved since then, and it's much deeper, right? So that's all exciting. So,
You're trying to catch lightning in a bottle there, though, really, right? There's
yes.
no way to de-risk a seed round deal. You can't do it, right?
No,
So the only way to make it happen is to do something like we did at Cloudflare, where we invested $1 million at 4 million pre, you know, and owned a big chunk of it. And then now that company goes to 30 billion. And guess what? We all have yachts, right? Not me, but everybody else.
Yeah, no, that's what we're looking for. So along those same lines, you mentioned that somebody was brilliant. Entrepreneurs can be brilliant. They can be resilient. They can be, you know, willing to roll their sleeves up. Walk us through like some of your thought process on some examples of entrepreneurs who, you know, have the characters that you're looking for. I mean, David Goon, as an example, who is the CEO of tZERO, has gone through different cycles, different companies, but he's come from a big company, which generally, candidly, is a red flag for me.
Yeah, I agree with that, but we'll talk about David. But just in general, you know, it amounts more to grit and hustle than it does to brilliance. Like I know a guy, I literally know a guy who can beat me in chess while standing in the other room, not, you know, making a salad, not even looking at the board. Like, he's that brilliant, you know, and I wouldn't invest in him because he doesn't have grit, you know, and that's really what makes the difference. I've been a CEO 4 times, a startup CEO, and it's just really, really hard. My wife one time said to me during one of my stints, you know, as a CEO, she said, "You understand you don't sleep really at all, right?" You know, and it's like that. You can't be a quitter. You can't get too down on things when things aren't going right. You can't read your own newspaper clippings when things are going well, right? You just can't. And success is just, it's almost never just this straight line going up and to the right. It's more of like a drunkard's walk, you know, with these exhilarating highs followed by these crushing lows. And so it helps a lot to have a thick skin and a little bit of equanimity. And, you know, so grit matters a great deal. And every single day at a startup is a sprint. And so not everybody's up for that. And so it's rare to find the right person. Regarding David, you know, look, a ton of companies successfully have grown up out of people whose only previous experience was with startups, and we could name 50 of those guys, right? Startups are dramatically different places from big public companies, you know, and they require CEOs to behave differently than they would in a public company. But perfection might actually be a little bit of a mix, which is like David is. So David came from ICE, which is a very large public company, but he'd been there almost since its inception. I don't remember what employee he was, but it was like, 10 or something, right? So he actually understands very well the fits and starts of small companies. He really does. He knew it coming in. He knew coming in it wasn't going to be predictable revenues, and it wasn't going to be that all the processes were in place, and it wasn't going to be that everything worked like a well-oiled machine. Like, he totally gets that. But it's also like really useful that he knows what it needs to look like in the end, and knows the entire path to get to that end. So that's what I think is really useful about David. Plus just, the man is a markets Hall of Famer, which is going to be useful.
Who's not expected to sleep.
He is no. He is absolutely I get calls from him at times that I don't want to discuss with you.
But listen, I'm thrilled that Overstock took the position that they wanted to bring in professional management of this portfolio. Walk me through some of the names in the portfolio so we can get into some details here.
Sure. I want to give the caveat that picking a few companies out of the whole portfolio is kind of like picking a favorite child. And by the way, if my kids watch this, I do not have one. Okay, I don't.
And in your case, with at least the Medici portfolio, there are 19 children. Down
19,
down from 21.
Right, down from 20. We inherited 21. 2 of them have been sold, so 19 left. It's a lot, and we're excited about many of them, but we don't have time for all of them. But I'll just offer up a few. I also, if your people are going to go watch the Medici Day, there's a few others that are noted there. So, but obviously, kind of the one that everybody wants to talk about is tZERO, which I think is a company with a really bright future. At this point, tZERO is basically the New York Stock Exchange for all things blockchain. But it's worth noting that, they're a registered broker dealer. So the degrees of freedom for what tZERO can do in the future is this like vast blue ocean of opportunity. The fact of the regulatory climate for things like cryptocurrencies and NFTs, is leaning somewhat toward many of them being declared securities is not only like perfectly fine for tZERO, it's probably a huge competitive advantage since, the company was super forward looking about that from the start. And then probably the best thing of all about tZERO is that recent investment from ICE, which is a very large investment, and some others invested in that, including us and Overstock. And so that just gives the company, plenty of runway to explore those blue ocean opportunities. And then, as you mentioned earlier, David Goon is, a genuine first ballot Hall of Famer with respect to innovation in financial markets. I'm literally still pinching myself that we got him to join. So that's a great one. The other one that people talk about a lot is BIT. And we always talk about BIT primarily because of the TAM. The way I always put it is, what's the total addressable market for money? And it's not 100% accurate way to look at it, but it's a fun way to think of their just massive market opportunity. But then we also love BIT because they're actually executing on that opportunity, right? The largest central bank digital currency project in the world that's actually in production outside of China is Nigeria, and that's BIT under the covers, right? Mm-hmm. And then the Eastern Caribbean Central Bank's digital currency, and this is interesting because it struggled out of the gate and there were some technical issues and stuff like that. That's also BIT under the covers. And I think that struggle is important because the only company in the world that has implemented a CBDC and gone through all the travails, of implementation and learn the lessons of those travails is Bit. And so every other CBDC company is going to have to go through those issues, and they're going to have to learn those lessons, but the box is already checked at Bit. And so, honestly, with Bit, if they did nothing other than execute well on the deals they already have, and it takes off the way we expect it will in just those countries, you already have a tremendous company. But that's not all they're going to do, of course. And especially since we just acquired the people in pipeline from one of their competitors, Criteo, which just was announced, I don't know, 2 weeks ago, maybe. And I could barely overstate how important that acquisition is, because the people we brought aboard from that are super high-level people with tons of experience with central banks, and they're well-known worldwide to exactly the kind of people, with whom we need to interact to win more deals. So Bit is, an awesome company.
But Matt, what I struggle with that opportunity is exactly what the business model is. How will they generate revenue?
They're generating revenue, and the way they'll generate revenue over time is what they call network fees, which are something similar to usage fees. And so usage fees on a currency that's if it's being used a lot, right? I mean, if it takes off and does what you hope it'll do, any percentage of 200 million people per day using, it's a big number, right?
I want to be careful with not getting too excited, but
don't. Okay, look, everything could come unglued. Every single thing could come unglued. That company could be a pile of smoke and rubble. Who knows? But there's an opportunity there that's really, really awesome.
I mean, to me, some of this is identifying solutions to problems with the technology that currently exists that needs to be, I don't know, recalibrated. I mean, some of this, I guess what I'm trying to say is, I think a lot of people look at the blockchain as this mystery, or Web 3.0 as this mystery, and it's not. We're not taking huge leaps.
There are some complexities to it, and honestly, anybody interested in blockchain should read the original Satoshi Nakamoto white paper, because it's dazzling, right?
Yes.
Especially if you've been in tech. I started working in tech in the 80s, right? And so you've kind of been around tech and seen these things happen before, and you read it and go, oh, honestly, it's the kind of thing that I could have thought of. There's nothing technical in there that I couldn't have thought of, but I didn't.
Yep.
Some guy, we don't even know who he is, some guy threw all this stuff together in a way that just sparkles. I mean, it's really amazing. So it's using this technology that we know about, we've known about for some time, and finding a way. It's almost like finding the perfect way to use that technology is what you're searching for.
Yeah, but going back to the Michael Dell analogy, we don't know about Compact anymore, right? But people were buying computers, IBM, Compaq, maybe Lenovo. I don't remember if that existed at the time. But it was
that was IBM at the time.
How things changed. It was about the delivery mechanism that made it so easy for people to buy. And then he was also getting his costs down at the same time. I think this is kind of interrelated to your portfolio. So talk about another company or two.
Well, I was going to say, with respect to what you just said, you can innovate on technology, but you can also innovate on business model, which is what Michael Dell did, right? So it was a tremendous job by him. Okay, well, a couple others I thought we'd discuss. So this one we didn't talk about it in Medici Day, but I'm really starting to like it. And this is a company called FinClusive. And FinClusive does compliance as a service with this automated full stack financial crimes compliance solution. And it's for traditional banks and modern fintech companies. They do like, KYC, KYB for onboarding and ongoing monitoring and screening and, enhanced diligence for really anything from a large traditional bank to a startup challenger bank, and then even to the financial ecosystem beyond banks. And this one, what I really, really like about them is the team. I really like it. And you know how early stage investors, we really overweight teams. And this is one of those but there's a rationale behind it. The rationale is that, good teams tend to be able to pivot as necessary, and they execute well on the current thing they're doing. And that's been true at FinClusive. So I know we don't talk a ton about them, but don't sleep on FinClusive. That's a good one. And then the other one I thought we'd mention is, at Medici Day a couple of months ago, in that video you mentioned earlier, a lot of people who listened to that fell in love with the company GrainChain. Totally get why they would do that, right? The CEO of GrainChain is a guy named Luis Macias, and he's just dazzling. He just has encyclopedic knowledge of the space, which is the global food supply chain. And he can just talk your ear off about the problems he's trying to solve in that space. And we talked, a minute ago about what CEOs of startups need to be. And one thing I neglected to mention then is that they need to be passionate about what they're doing. And Luis is just that in spades. This is really great. I grew up working in the summers as a hired hand on farms in Eastern Washington and Northern Idaho, and that grew like wheat and peas and lentils. And I literally watched with my own eyes some of the problems that GrainChain is trying to address in the global food supply chain. And they're real and they're pervasive across the globe. And, it would be really, really valuable if GrainChain were able to help solve some of those problems. So that's a great company too.
So it brings up a random question, but coming back to venture capital in the market, you also come across many large companies that are investing. You mentioned Oracle as an example, not necessarily in the blockchain, but just generally having a portfolio. Is this more of a trend than it used to be when we were first starting out? Where big companies, like whether it's, I know Visa, MasterCard have portfolios, et cetera. I mean, you come across this often?
Yeah, I mean, a lot of companies have an investment arm. I don't know if it's more than it used to be. I mean, when I was running the Oracle thing, that was in the late 90s, so it's been around. I think maybe a difference is more the consistency of them. So back in the day, it was in many ways the dumbest thing in the world. What would happen is they'd get all excited about investing when the market was frothy, and then when it dived, they'd get out of it. Yep. Which is just like the dumbest thing in the world, but that's what would happen. And nowadays it feels like more companies are like in it for the long haul. We'll invest in frothy markets, we'll invest in low markets, we'll do whatever we got to do. That's the part I think it's different.
Yeah, I was an early investor in Cisco, and at one point their venture capital book was huge, and then it blew up, right? And then
right. And then one that has just a gigantic venture capital arm is Salesforce. Salesforce, that's a huge. I don't know how many investments they have. It's in the hundreds. So it's tremendous. Actually run by a guy who used to work for me. He's awesome guy, John Samorjai.
Well, I'll have to reach out to him, find out about his blockchain exposure. Any other, companies in your portfolio related to Medici that you want to highlight?
Sure. How about, I think there's just because this is an interesting lesson, I'll talk for a second about PeerNova. So PeerNova is, I think it's an up and comer. It's a data quality solution for huge financial institutions. And they're starting to make real inroads with those institutions. They've just launched, I think last week, or maybe it was this week, they launched a new product called Clear Consensus that they've been working on for a long time. And I really expect that product will be game changing for them. But I think the interesting thing about PeerNova that makes it worth talking about is, and it's very underrated in terms of building a company, it's the quality of their non-investor board members. So this company, in addition to me and some other investors, they have people like Chet Kapoor, who is the CEO at DataStax. He's formerly he was a senior exec at Google, and he was a CEO at Apogee, which Google bought. And Chet's on the board, and so and some other people too. And people like that, they just know the road that PeerNova has to trod. There's data to suggest, that almost nothing is more predictive of a company's success than the company's access to counsel from smart and experienced people. And then on top of that, the biggest investor in the company is a guy named Howard Mergelkamp from Mosaic Partners. And he's just this absolutely unwavering fan of the company and just the kind of guy who'll move heaven and earth to make PeerNova successful. So that's a weird sort of underrated, piece of company building that I thought might be worth talking about.
Excellent. So I just, in the interest of time, I'm going to go at you with two wildcard questions that I ask everybody that come on the show, and then we'll wrap up. Okay. So what is like the one thing that investors in the blockchain are not really paying attention to today that in hindsight would have been obvious?
So I do think that DeFi is the gorilla of blockchain. I do. I think the financial system is, the thing that's most likely to be disrupted or disintermediated. But, what's happening is we're mostly seeing, I'm taking pitches all the time. What we're mostly seeing is essentially a recreation of the centralized finance world on the blockchain. So we're lending, and we're doing swaps, and we're doing all those things that you do with your, for lack of a better term, your regular bank or your regular broker. So what I'm interested in, though, is this, what could we do with a blockchain that simply couldn't be done at all before? What's the totally new thing that would blow my mind? And I want to hear that thing, where I can't wait to get home and tell my wife how the world just changed, And I guess you could probably argue that crypto itself is that, and I buy that argument. Crypto itself is, world changing, but that's in the bag, And so I think the blind spot that is, what's the thing? Don't just recreate this centralized finance system for me. Tell me what you can do with the blockchain that was just not possible before. And I think that's the thing that's going to, knock our socks off.
It's what you don't know, what really matters, right? Yeah. And we'll all
know it when we see it.
Yeah.
And obviously, I'm thinking about that myself, trying to figure out,
of course,
what would that be? But I need smarter people than I to think that through. And that's the one I'm looking for is my point, when that happens.
And also, which industry do you think will be most affected by the blockchain or Web 3.0, whichever you want to focus
Yeah,
on.
I said
Beyond
again,
finance,
I
by the
still
way.
think
Yeah,
it's financial services. I still think it's financial.
that's too easy. Come on, that's too easy. Have some fun.
Okay. Luis Macias in the global food supply chain. It's another, like, one of the things you like to see is where you see a company and say, oh, that's a really good use for that technology, right? And so, what is a blockchain? Well, it's this very, very secure, you can't change an entry once it's been entered, and then it's very hard to hack, right? And so show me the things that really use those kind of features. And, that would be one. I mean, it's just rife with all kinds of cheating, right? And blockchains are a way to keep people from cheating.
Trust.
So I'll get behind Luis on that one.
Okay, well, we'll end with that. I like that as a conclusion. Thank you, Matt, so much for joining me today, and I look forward to watching all your companies block and tackle to success. Enjoy the Utah weather. I'm jealous. You know that.
Beautiful. All right. Thanks a lot, Dan. Nice to see you.
Thank you. Bye-bye.